What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is November 28th of 2019. Well, folks, I hope you are having a fantastic day wherever you are, and in today's update, we're going to be talking about a few different things, taking a look at crypto markets, which have ticked up over the last few hours, and then also talking about how institutional capital is slowly creeping into crypto markets, and last but not least, we're going to take a look at crude oil markets and why I'm confident that over the next few years, we're going to be entering into $20 to $40 a barrel in the sense of price for oil. I know it's a very big claim, but we're going to be talking about that all and more in just a moment. Just want to let you guys know our video is sponsored by eToro. Now, for those of you who may not know, eToro is a social trading platform. It's one that I've been using for some time. And again, what's really nice about it is that you're actually able to use their new feature known as copy trading. And this is the ability where you can copy a variety of different traders in the cryptocurrency space real time. You can not only see their statistics, you can see their portfolio holdings at the moment, but you can also see a chart of their historical performance. And with a simple one click on the copy button in the top right corner, you can copy that trader real time alongside them at the exact same price. So if you guys want to check that out, feel free to check out the link down below in the description. That being said, though, let's go ahead and take a look over cryptocurrency markets. So as you can see, not only is Bitcoin up over 5% in the last 24 hours, but the general crypto market is following suit here with most crypto plays in the green territory with a few anomalies at the bottom. We can see here as well, market cap is reflecting that. We're up about $8 billion over the last 24 hours. So getting towards that upper band, again, maybe even pushing for some upward movement sooner than we are expecting. But again, I generally want to see us hold this range for a week. It would be nice to see to just solidify this as support. But again, maybe the market's already confident enough to start moving higher, and people are starting to accumulate now that prices have corrected as much as 50% in this case, especially when we're talking about Bitcoin. Right. We can see here as well, market dominance still holding around the same range there. Nothing too serious at the moment. We'll keep an eye on it as time progresses. In the sense of price action, again, not much has changed too much in that sense, guys. I could pull up the chart and show you that, we have had some green price action. We're sitting around 7,400 at the moment. Again, this is a time period, guys, even though my three indicators on the weekly have not flashed, I add at 40 to 50% dips, right? Usually my number basis is 35 to 40, but we've actually had an opportunity here to get it at a 50% discount because we had an over-exaggerated rally, as we've talked about. Again, always keep in mind the time frames when we're comparing cycles. And we have performed in a larger market in a very short period of time better than we have in the previous cycle. So that's something to bear in mind. Why the correction has been a little bit stark. But I want to go ahead and talk about some news here, guys. We've got some key things to talk about. So Upbit, which we talked about the other day, the $50 million ETH hack that Upbit has had, has now been the 7th major crypto exchange hack of 2019. And there's one thing I kind of forgot to mention, because you guys know I do everything. I have my topics planned and my talking points planned, but sometimes I'll miss on a certain point that I want to hit on. And I want to talk about it today as we have this headline here. The key thing that I wanted to stress yesterday that I didn't is that I think the biggest goal we have in 2020 from all the different crypto, really the crypto wallets out there, is to make sure we can make it where you are either your own custodian or you're your own custodian to a very high degree to where we can't let stuff like this happen, where there is some control back to the user. If we can't fix this underlying issue and make it extremely simple where it doesn't even feel like you're having to manage your own money, but at the same time, you can become your own custodian. You are almost, if not near, absolutely the sole custodian of your money. Then in that case, crypto is not going to win out in the long term, because that's the sole benefit of crypto. If we can't make it where everyone can have the security of owning their own funds and not have it in some central honeypot that either attracts outside hackers or inside perpetrators from stealing your funds, what's the point of crypto, right? In fact, it's actually a net negative at that case, because there is a huge incentive for people to hack it because it's immutable and it's all in one location. What benefit does that bring? I don't see any benefit there. And I know a lot of you and a lot of the hardcore fans in the crypto space see that. It's a stress point right now. And I kind of akin it to this case. This will be my last point. It's like the intranet back in the 90s, right? How people thought that this was the way the internet was going to look like, right? In the case of crypto, it would be living in a world of exchanges where every bit of funds is centralized in these big custodial solutions, as well as the idea that, we're going to be, be using these big, siloed, units in this case to be able to process trades or use cryptocurrencies. I don't think that's the case. And I don't think we're going to need payment processors for crypto and all this stuff. No, it's all going to be on cryptographic networks. It's going to be on these public networks that we already utilize and actually work to some degree. It's just a matter of making them scale better, having better privacy, and also in this case, making it easier to manage your keys. We got to get out of the age where we're still using addresses to send money to one another. Anyways, going on to talk about a little bit of the further positive news in the cryptocurrency space, Bakkt has reached a record high daily volume of $42.5 million worth of physically settled contracts. Now, this is pretty exciting news. Now, of course, 42.5 million is not a massive number. It's nothing crazy. However, it is a massive leap up from where they have been so far. 60% over their last record-setting day with over 4,443 contracts. And unlike the other major days of volume output that we had on Bakkt contracts, it's coming on a positive day. It's actually coming when price is rising. Now, again, I don't really care about that. I just wanted to mention that because some people think that's the end of the world if it's on an up or down day. No matter what, it really matters in this case if contracts are trading. And right now we've seen a new level of volume, $42.5 million on the daily, processing on an update here for Bitcoin. So it is good to see this, right? It showcases that over time we are seeing more institutional plays, and it is a domino effect. I really want to hit on that point. When it comes to Bakkt, so many people expected this to just be a knock out of the park in this case. It was going to be something huge for Bitcoin. But the fact of the matter is that even with an ETF or any kind of financial product, people are always going to be a little bit slow to adopting it, right? Not to mention we are in a pretty dead market at the moment. Things aren't very exciting for most people. For me, it is because I like discounts. But most investors, even institutions, you'd be surprised, will in many cases come in later to the party. They want to see the product tested. They want to see that the market has continued to sustain itself and get back to its previous highs, right? They want to see that cyclical nature to Bitcoin that many of them can't see because they don't understand the halving, or they don't understand the mathematics of Bitcoin, or they don't understand how Bitcoin runs in these very parabolic, euphoric 4 to 5 year cycles, right? So that's the thing to keep in mind. Most people don't know about that. All right. So one last thing I just wanted to mention here as well, I'm really eager to watch it. I haven't yet, is the Bitcoin versus Ethereum, maximalism versus realism, Tone Vays versus Richard Hart. God, I love that title, Cointelegraph. But this was a debate that I wanted to watch live because I was at the conference, but it was hosted at Block Show. It's between Richard Hart and Tone Vays, two guys who I've gotten to meet over the last few years. Again, I'm interested to see this. I remember they did an interview a long time ago, and they were in complete agreement almost back in 2017, but I'm interested to see what they say to each other now, debating between the two beliefs that they have. All right. So one thing I want to talk about in traditional markets, guys, is the Permian Basin and broader oil markets. But the Permian Basin, which is one of the largest production facility, well, I wouldn't say facilities, it's an area between Texas and New Mexico. One of the largest reserve areas in the United States for natural gas and oil, has now been an anchor dragging down the jobs numbers. Now, here's the thing. I think this headline is a little bit misleading because last year it produced over 16,700 positions in the economy in just one area of the United States. So I would say that this has still been a massive net positive. It's one of the biggest, production facilities in the U.S. However, it has been a cut on over 400 jobs in the last 10 months of this year. But I think this speaks to a broader concern here, right? That there is an over-glutton supply on the world stage for oil. And this actually, more than stagnating demand, which we already talked about in previous episodes, per capita consumption of oil has been going down over the last few decades, or the last 2 decades since the early 2000s. It's not just stagnant demand that's weighing down prices of oil. It's really the glutton supply. And the Permian Basin is a great point on this, right? It is the world's biggest shale patch, right? And it's now producing a drag on jobs. So what signal does that send? Well, it has a lot to do with prices, right? We've seen prices setting new significant lows, lower highs in this case on price since back here in 2008. We have not been able to recover above there. And I think this is a really good signal to showcase that we've reached, in a sense, peak consumption per capita of oil, right? And not to mention, it's come in a mix with a terrible glutted supply for producers in this case, because during this time period we were having a shock in supply with spiking demand, and now we're having the opposite, which is leading to prices going down like this. And a good way to kind of talk about this is to talk about the Permian Basin. So America's oil and gas reserves nearly doubled with a massive discovery back at the end of 2018. And I've talked a lot about this in the newsletter over the last year. I did a whole article piece on it, I think, in early 2019. But I want to share it with you guys as well. It's very, very important, right? And that is the fact that nearly 1/3 of the United States crude already comes from the Permian Basin, right? This is something significant to take into mind, how much oil is in this reserve and how it's located in the United States. But along with that, we had a massive discovery that over 46 billion barrels of oil and 20 billion barrels of natural gas are trapped in the low permeability shale formations in the Permian Basin. So what does this mean? Well, it's not only a crap ton of oil and natural gas, but to really put it in perspective, it basically doubled our oil reserves. It increased over 50% up to 65% of our natural gas reserves from this one discovery. And to signify that in the chart here, right, just how much 46 billion barrels of oil and 280 trillion cubic feet of gas is, this really signifies just how much our reserves have increased from this discovery, right? I mean, this is 2017, so we haven't even seen this reflected here. All right, we've already seen that we've been in a general uptrend here in the United States with discovering through fracking a lot of new technologies. But think about doubling these numbers and continuing to increase these over time, right? I mean, this is absolutely insane here, guys. It's huge for the U.S. economy in this case. But the issue here is that the United States, much like Russia and OPEC nations and other commodity producing countries, are now in a very big issue, or they're facing a very big issue, and that is the fact that there's a massive glut of open reserves, right? We thought decades ago we'd reach peak oil, but in reality, we're reaching peak demand. So now that we see this, right, now of course, when I say peak demand, I don't want to say that the world is not consuming more oil on a year-by-year basis. We are consuming more oil, right? As the world continues to industrialize, as people move more into the middle class, it's going to continue to happen. But on the sense of a per capita consumption in the United States and a lot of Western countries, we're actually seeing that decline. And that's hitting a very stagnant hit on demand in this case over the long term. So it's important to reflect this when we're talking about making investments in oil or general kind of consumption-based commodities, to think about the long-term impacts of changing supply and demand. And in this case, we have a perfect example of how both ends are not helping price. So that's why I've been confident over the last few years. I've been talking about this since back here in 2018. I think when we really started talking about macro. I've been watching this back as far as 2017, ever since we dipped back here. But my major point here is that though it's been definitely on a longer term time frame, it's been taking a while for us to finally make that commitment downward. I think we're going to be entering in from the $40 to $20 channel. And considering inflation, this is going to mean oil is going to be the cheapest it's ever been in history. Right? It's going to have to take for oil companies to still remain profitable. It is going to be a race to the bottom here. And it's going to be a matter of companies finding ways to be able to refine oil, right? Being able to refine that petroleum at the cheapest price possible and still make it profitable, right? So there's going to need to be some breakthroughs in the sector, or it's going to lead a lot of investors away from the industry and looking for alternative energy sources that surprisingly are more profitable. But who knows? Again, it's going to depend who can still produce at those cheaper levels, and we tend to find that it's a lot of OPEC nations that can't produce at those levels. Right? So interesting macro topic. I'd be fascinated to know what you guys think about this. That being realized, that's going to be it for today's video. I hope you all enjoyed this daily update. And if you guys did, drop a like, leave a comment on what you think about it if you got something to say. And outside of that as well, again, I just want to reiterate, guys, I hope you guys spend some time away from crypto markets. Spend your time away from the computer and everything. I'm only going to be on here to do this today, this video, and then I think I've got a call later, but I want to spend some time with my family. I want to take it easy, and I hope you will too. It's that time of the year, so make it count. Anyways, I hope you all have a wonderful rest of your day, and I'll see you all in the next video. Stay tuned.